inquiry demolish your credit. Here's how the credit bureaus interpret inquiries. They look to see who made the inquiry. There's no hard and fast rule that you can have X number of inquiries over a certain amount of time, or it can come as, a certain number of people. The bureaus look who pulls inquiries. Well, if the inquiries are coming from mortgage brokers and banks within a finite period, like a month or two, they recognize that what you're doing is you're shopping for a loan. You're comparing. That's significantly different than if the inquiries come from creditors like MasterCard and Visa card, like Macy's, Bloomingdale's, and Costco, like Exxon and Arco Gas. In each of those situations, you or the would-be borrower is looking to expand the amount of credit they're getting. So those can count against you. Now, even within that framework, the number of inquiries you can have, I have to keep emphasizing, there's no fast rule, and even when a bureau comes up with something, it changes. And the bureaus don't really set the rules. It's the people, the companies to whom the bureaus sell their information, who develop the financial algorithms, the mathematical algorithms that generate scores. So these individual companies don't have one rule in their industry that determines X inquiries over time means this on your credit. It's a floating, ephemeral number. But I can assure you that having many inquiries, 10, 15 inquiries over 3 or 4 month period, will probably have some negative impact on your scores. But we're talking about 2 to 3 points. As negatives on your score goes compared to having maxed out your credit cards or too high balances, compared to missing a payment on a credit card or a mortgage statement, compared to a collection or a tax lien, compared to not having enough credit. Those are going to have substantial impact. 2 or 3 points for the inquiries, it's measurable. It can, on occasion, be significant, but it generally isn't. And if you're going to go to a broker or bank, the only way I can do the right job for you is to really analyze your income, analyze your assets, get a sense of what your work history is, and pull your credit, because I need to see a financial credit score. I need to look at what's really on the report. If you want me to do my best job for you, I need to be able to do that, and you shouldn't be that wary of my pulling your credit, because the odds are it won't have any impact, and even if it does, it's a very, 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 very small price to pay.